Hello there, this is James and you're watching Tixee Live, and a very good morning to all of you. Now, in today's program, I want to talk a little bit about what Jay Powell said yesterday in the first part of his testimony to Congress and how the market has reacted to that. I also want to talk about Dr. Copper. But anyway, before we get into that, don't forget these little videos are for educational purposes only, and in no way whatsoever should ever be treated as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So, Powell, yesterday, Congress. What's basically happened? Well, basically, he's add to recession concerns. Adds to recession concerns. We've been talking about recession, the dreaded R word, for the last couple of weeks, till my memory serves me correctly. And Powell, which we all sort of thought he would be a bit, might spook the market a bit. He has indeed spooked the market. What he has said is as follows. Hi to you too. Hi. And good morning. So yeah, as I said, he has added to recession concerns. In fact, what he said yesterday, he said, strongly committed to bring down inflation. We knew that. That's why I call him the inflation terminator. And as well as that, he then said, recession is certainly a possibility. It is not our intended outcome at all. Of course, it's not our intended outcome. Nobody's intention is to cause a recession. But he did, the fact that the Fed are so aggressive to inflation is really spooking the market. And the fact that he's actually had said the recession is certainly a possibility has really sort of like put the cat amongst the pigeons, so to speak. And here's something else he said, which is also sort of scared the market. And he said, not take any specific size of rate hike off the table. I repeat that, not take any specific size of rate hike off the table. So what he's basically saying is he's not committing to just 25 basis point rate hike in July, or 50 or 75. He's actually sort of even saying to the market, and the market is now speculating this, he could do, or they could do, 100 basic point rate hike in July. 100 basic point rate hike in July. And that is really spooking the market. Because already the fear is that if we're too aggressive with interest rate hikes, then the economy can't handle it. So by doing a really aggressive move of doing 100, bit by bit, maybe, 25 here, 50 here, 75 here, but 100, now that's scary. And that is spooking the market. So this is why the market is feeling a little bit scared at the moment. In particular, commodities are under a lot of pressure at the moment. Commodities, which makes sense because obviously, if we are in recession, demand starts to dry up. So commodities are under pressure. Oil, which we'll look at in a minute in particular, is currently trading at the lowest levels since mid-May. Okay, mid-May. But I want to talk about another commodity. And we'll look at oil, don't worry, on the charts in a moment. But there's another commodity I want to talk about. And this is a commodity which the market looks at as a form of like an indicator of how the market is feeling. Okay, it's even like it's known as an indicator itself. Okay, and that is Dr. Copper. Dr. Copper. Okay, it's obviously not a doctor, it's copper. I'm from West Country, so I've got an accent. So copper is my favorite word to say. It's referred to as Dr. Copper because if it's under pressure, it indicates to the market that the market is bearish. Okay, because copper is an industrial metal. The red metal is industrial metal. So if it starts to fall in price or falls in value, that means demand is drying up. That means there is not growth. Okay, and in fact, the matter is the red metal, I won't say copper again because of my West Country accent. The red metal is currently trading at a 15-month low. 15-month low. Okay, so it is under an awful lot of pressure. Okay, and the thing with this story, it's nothing to do with supply. This is to do with demand. And when demand starts to drop off, growth, it indicates that growth is dropping off. So this is why the red metal is under a lot of pressure, and the market is talking about it. So let's have a quick look at it actually as it stands. Okay, so this is oil at the moment. So we talk about oil as well. Oil, as you can currently see, is round the lows of mid-May. Currently trading, this is WTI. This is currently trading at $104.42 a barrel. Brent is again low as well, under pressure. Currently trading at $108 a barrel and 44 cents. But let's have a look at the red metal. Let's have a look at copper. Copper is currently trading, okay, at $8,643. Okay, and as you can see, it's 20% down from the highs. Okay, so it's actually like I say, 15th month low. So when copper starts to fall, like I said, that's what they call it, Dr.Copper. It does indicate that indeed growth is slowing down. So that is a bit worrying. As we can see, this is on a 1 hour chart. If we look at 4 hours, it's way under the 100 and the 200-day moving average as well, indicating it is on a downtrend. RSI is slightly under 30, but it's hovering around 30, so it's not really indicating potentially that it's is oversold either. So yeah, so that's the red metal. Other news. Yes, to go along with obviously demand and growth, we had Germany service PMI, which is the purchasing manager index. It's like they sort of do all the inventories and things like that, buy stuff for manufacturing and other industrial stuff. That fell dramatically down to 52.4, where the expectation was 54.5, so a lot lower than anticipated. So yeah, we are, we got signs of definitely of growth slowing down. You're more than welcome, my friend. This is what I'm here for. Please come and ask me questions as well. You're more than welcome, my friend. So that again, and we also had French PMI as well come in a lot lower than anticipated. But Germany, which is the biggest and strongest economy in Europe, that's not a good sign when they start to decline either. Right, what else we got on today? We'll have a quick look at the markets again in a minute. Actually, let's have a quick look at the markets now. Let's have a quick look at how the euro and the cable and gold is doing. These are the assets we've been talking about over the last couple of sessions. First of all, the euro, it's trading at 1.05090, currently a little bit under pressure. That's down to dollar strength more than anything else. As you can see, remember that level we put in a couple of days ago, that area of interest, 10578. It tried to test it again yesterday, but it couldn't break it. And as you can see, tested it and it's now under pressure again. However, it's finding a little bit of buying power around the 50-day moving average. So that's an interesting area to watch. But that is an area of interest. Again, it tried to test it and it could not break it for now. Cable, British pound, again under 122, currently trading at 121.76. Testing this level again, we've been watching 121.97. So it's testing that level there as well. Gold is still range bound, unfortunately. If you look at it, a 4 hour, it's still between those two levels, $1,828 and $1,864, the two areas of interest with gold. Bitcoin, we talked about Bitcoin a bit as well over the last couple of sessions, still really tight, still hovering around that level we've been watching, $20,355. So yeah, that's how the markets are standing at the moment. Tepid and a little bit spooked. Other information coming out today. We have UK services PMI due in about 20 minutes at 8:30 UTC. US initial claims, that will be something worth watching. I'll definitely be watching that because obviously the Fed has always said that the US economy has been pretty strong down to the fact they've got a good labor market. If we start seeing a growth in initial claims, then when the questions will be asked about how good the US labor market actually is. And as well as that, of course, we got Powell again, finishing off his testimony to Congress. And that's at 2 p.m. UTC. Let's see what he has to say today. The markets as they stand, the FTSE currently down negative 0.59%, DAX negative 1.46%, and Eurostoxx down negative 0.87%. 0.5%. So that's how the markets are currently at the moment. Don't forget, you can ask me questions whenever you like. This is the whole point why I'm here. I've had a couple of people say hello. You can even just say hello to me if you like. It's always a pleasure. So never feel that, you know, you can't ask me questions or you can't say hi. So let's have a look. I think I've got something here. Great video. Have a great day. Thank you very much. Very, very kind of you. Very kind of you to say thank you. So don't forget, you can ask me questions whenever you wish. This is what I'm here for. Don't forget, I'm back online again this afternoon at 1 p.m. UTC. We'll discuss what has happened so far in Europe, and we'll talk about what's to look forward to in the US session and what Powell could potentially say next. If there is no further questions or nothing, no questions at all, okay, no problem. Don't forget, if you do have a question later, add it to a comment on YouTube or on Facebook. I will see it and I will answer it in the next video. In fact, there was a comment made by a gentleman who said that maybe digital gold should be my next love affair, which, because I'm a gold bug, I thought was really funny. I am old, so I should maybe sort of get into more recent trends, like maybe look at digital. But that was a great comment. Thank you. I really appreciated that. It made me chuckle this morning. So yeah, don't forget, I do read the comments and I will reply to them live on air. Okay, as I always say, if you're watching me on Facebook and you like it, give us a follow. If you're watching me on YouTube and you like it, subscribe if you like. Hit the notification button so you know next time I'm going live. If you've enjoyed this little episode and you found it useful, give me one of those. That's you know, I like to know if you're liking it and if it's good. And on that note, remember, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.